Hey guys, it's Tanner Manson from Future Investing, and today I want to talk to you guys about a very high growth stock, Docebo. In this video, we're going to be covering three things. We're going to be talking about the financials of the company and where they currently are. Next, we're going to be talking about their growth strategies coming up and how they're going to take on the platform going forward, and my opinions of the stock and whether I'm holding or buying into the future. Okay, now before we go any further, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, if you could, smack the like button down below and subscribe if you want to see more content like this. Now let's jump right into it. Like I said in my top 3 growth video for Wealth Simple, that Docebo is an amazing company if you're looking at Canadian high growth businesses. Docebo's business is very much like Skillshare, where there's creators that have to create videos and then people can watch it and learn how to do those things. Except what Docebo does differently is, unlike Skillshare where they're doing it to the individual person, it's a business to business sort of company where they have a platform for businesses to be able to post to their employees to help train them on new processes of the business, or even new employees that don't know what they're doing in that sort of space. But it's the entire platform that Docebo is trying to do, with over 2,179 different businesses that sign up with them each year. And just quickly going into some of the finances of the company, they actually have very, very strong numbers here. All those customers added to an annual reoccurring revenue of $74 million US. Around 89% of Docebo's sales are reoccurring in nature, and that is a little bit down from, the 94% of Q3. But that being said, although the reoccurring revenue is down from last quarter, what is up is that the compounded annual growth rate of their actual, revenue up to 65%, which is up from 58% of last quarter. And this is compounded annual growth rates. You have compounded annual growth rates of 65%. That's like twice as high as Facebook was growing. And to add on to all those numbers, 79% of the customers that they've brought on are signed up for multiple year contracts to help, establish a longer term customer base. So with some of these customers not signing up for multiple year contracts, some of them obviously are going to be leaving. So next, we're going to be talking about retention rates, which is to show us what percent of these customers are staying, and which are leaving. Obviously, even with the best of companies, there are going to be a percentage of people that leave. We're going to go pretty in depth with this conversation of retention rates because it's very important in the SaaS models that we have to understand how it works and how much people are staying, and get into some pretty nitty-gritties of the conversation. First off, I have to explain how they have a retention rate of 108%. Now, this doesn't seem logical to some because, people think how can you retain more people than you actually have, but it's actually built into the revenue as well. This is the same calculation for the entire SaaS industry, or in this case, it would be, an LMS, but that's besides the point. But we have to first understand that a retention rate higher than 100% is considered a negative churn. Because although there is some percentage of people that may be leaving, let's say for example 2%, but the actual existing clients that we have are growing by 10%, increasing the products that they have with us, that we get to an actual percentage of 108% because, what we're losing is not actually equivalent to what we're gaining from our existing customer base. The retention rates are not on individual clients, they're on the products that they have with us. So take the negative churn that we had just explained and add it to actual customer growth over time, and you have statistically the fastest way that you can grow a company. Take these insane retention rates that we're talking about, add it with some of the highest compounded annual growth rates that we've ever seen in any of these sort of cloud-based SaaS companies, add in the amazing high cash, low debt software sort of business that they have, and we are looking at a very high growth tech stock in the long term. And what I love most about Docebo is that whenever they first started back in 2004, they were not a cloud-based system. Well, obviously, it was a CD that you could send out to your customers that would buy your products. But now they've adapted and they've changed their systems to take on new AI systems and cloud-based systems and all these sort of things. They adapt to what's needed to stay relevant. And if anything does change in the way these sort of LMS systems, are taking advantage of their processes, that they are also going to do that as well. They stay very adaptive and stay very futuristic, and there's tons of R&D to stay, the big player in this space. I got this quote from their website and I absolutely love it. We have never stopped embracing new technologies as we seek to redefine the way modern workforces learn. Staying on top of the ball in tech companies is the key. And some companies for example, in my opinion, Intel had kind of gotten lazy, and they stopped adapting and they thought that they just had it in the bag because they had great contracts like Apple. once Apple dropped them, they kind of dropped the ball, and, it's not everyone's favorite, semiconductor company like it was back in the day. Looking at all the finances at this company, I mean, it can look like it's absolutely amazing, but it is a little bit concerning that since 2016, some of their growth rates have dropped. And obviously that's going to be the case as, companies start to get larger and larger because you have new expenses and, clientele is not as obvious to be spotted out. But whenever you're putting a price target on this company of such high amounts, like if you're making $74 million a year with still a net loss of $3 million, to put a market cap on this company of $2 billion is very expensive premium. And some of their numbers have been dropping since 2016. So it all depends on how you guys see this company going long term. If high growth tech stocks are your sort of niche and you want a company like this and looking for something like this and you don't care about the large premium and you have faith in, the growth of the company going forward, then yes, I mean, this could be an amazing stock for you. And there are a ton of optimistic things for this company going forward. Like, I don't want to make it all doom and gloom. Like, with all the high unemployment rates that we have right now because of the illness that we're all experiencing, as that starts to get back to normal, vaccines start to come out and everyone goes back to normal, the hiring rates are going to go like crazy. Like, there's going to be huge hiring surges. And so as that happens, to have, like, this would be the perfect time for companies to relook at their learning management systems and try to figure out what they can change. And if Docebo is there, if they can capitalize on that movement and get in the door on a lot of these businesses, they're going to make a ton of money. Currently, I haven't bought in any shares and I'm still reviewing my options on whether I want to take a position in this stock. It's looking insane in terms of some of the statistics. Like some of the growth numbers are incredible, but we are in a spectacular time. And it's not like you just get to take all that growth without any of the, the valuation pricing that in as it is. Like the prices of this stock is very large. It is an expensive company. $2 billion doesn't seem like a lot for this company, but $74 million of revenue and $3 million loss doesn't seem like a large amount of revenue and income either. I mean, if anyone told me that they had a position in this stock, even at, the $70 price range, I wouldn't even fear for them unless they, they were someone to panic sell in a little bit of a bear market. What I would say is that don't get FOMO over a stock like this. The numbers can look so juicy that you may want to get a position in it regardless. I think that if, there still might be a little bit of bumps in the road for the tech markets going forward, just looking at a macroeconomic scale, like what's happening with a possible inflation and the Fed. But that being said, if someone was to tell me that they own this stock, I don't actually think it's a bad purchase. I think right now for this company, they're not large enough for me to think that, they're going to be as successful as something like a Shopify or a bigger company that I'd rather pay this much of a premium for, because they have a lot of the things set in stone. Docebo is still very much in its infantile stages, and I kind of want to see a little bit more out of them before I start to buy in. Like, if they have another Q1 of 2021 and some of the numbers have gone down still, it might fear me, and the price might reflect that and have a little bit of drop in the short term. But tell me what you guys think. Like, do you guys own this company? Do you guys own a different LMS, or do you guys completely stay away from this sort of space? I'd be very interested to hear what your opinions are of this stock, or even my opinions of this stock down in the comments down below. And while you're down there, I mean, smash the like button if you can and subscribe down below if you want to see more content like this. I've been putting out a lot of sort of individual stock analysis videos. I'm going to try to step away from it, talk about some of the bigger things that are happening in the markets. Like, there's just so much to talk about right now that I honestly don't even have enough time to record myself. It's crazy how much is going on in the markets right now. Quick little statistic before I go, just to sort of play with your minds right now, because it might help with sort of pricing some of these tech stocks in. Did you know that in the past 5 months that there's been more money put into the stock market than there has been in the past 12 years combined? Statistics like this sort of scare me away from companies like this, although I can't help but sort of, put my analysis on these stocks because they are the most exciting. It's why the stock price is so high. But it does scare me that if there is a change in the markets that, maybe there won't be a record-breaking shift to the stock market if there is a small, bear market or, a dip that lasts longer than 1 week. Anyways, guys, I really do appreciate you guys watching the video. And until next time, hope you guys enjoyed the video. Stay safe trading. Bye now.